There is a huge deficit in housing in Africa, and Kenya, to be specific, 200,000 is the deficit. We can only supply 50,000. Why? These are the conversations we're going to be engaging Shelter Afrique Managing Director and CEO Andrew Chimphondah. But right now we start with his profile.
Andrew Chimphondah is the Managing Director and Chief Executive Officer at Shelter Afrique. Chimphondah, a Zimbabwean national, is a chartered accountant and member of both the South African Institute of Chartered Accountants and the Institute of Chartered Accountants of Zimbabwe. He holds a Master of Business in Administration, majoring in International Finance from Durham University Business School in the United Kingdom. He is currently completing his PhD thesis on innovative housing finance solutions for the affordable housing market with the Da Vinci Institute in South Africa. Chimphondah has more than 20 years experience in finance, business executive leadership, experience in real estate, finance, retail and wholesale banking. He joins Shelter Afrique from Housing Investment Partners Limited, where he served as the Group Chief Executive. He has also worked as the Managing Executive for National Housing Finance Corporation, which is the largest development financial institution in Southern Africa. He has also served as a director and managing executive levels, focusing on home loans at ABSA and the Standard Chartered Bank in South Africa.
Well, thank you, sir. Welcome to the Trading Bell.
It's a pleasure to have me, Noah.
Thank you. So, let's start. 2018, because history is important.
Yes.
2018, you marked a huge loss,
Correct.
923 million. Then 2019, you scaled that down to 59 million shillings.
Correct.
That is quite a leap and quite an improvement.
Yes.
Tell us, how did that come about?
As a board, we put together a 5-year strategy, which was from 2018 to 2023. And I think critical to that strategy was that Shelter Afrique must focus on becoming financially sustainable, developing impact and relevance to the member states, because we are owned by 44 countries. And then, of course, lastly, as an organization, to be sustainable, improve governance. Now, when we talk of the numbers, that is a 94% improvement in terms of reduction in loss by at least about almost 900 million shillings. And that really came about mostly, firstly, I would say that we focused on making sure that most of our creditors or our lenders, we paid them a significant amount. So we reduced our borrowings by about 33%, and then that led to a reduction in just the interest expense alone of about 600 million of that amount. Then we also focused all our efforts in terms of aggressively collecting on our non-performing loan book, and of course the performing loan book as well. As a result, we actually collected a significant amount, at least about 1.6 billion Kenyan shillings, and the impact on our profitability of just that itself was another 500 million in terms of Kenyan shilling terms. And then from a cost perspective, we introduced a cost rationalization drive, which saw us improve our operating expenses by 7% when we compare with 2018.
Definitely. And you've mentioned the strategy, which is running up to 2023.
Yes.
For now, 2020 was poised to be that year,
yes,
where things were going to turn around.
Yes.
For even a more positive result.
Yes.
Yeah, and we've seen how 2020 has come about. So tell me, how is Shelter Afrique, weaving with this COVID-19 and this environment? How are you adjusting as a company?
With COVID, because that's a pandemic, so the first thing was to ensure that the staff remain alive, the staff remain safe. So what we decided to do as an organization is to ensure that all the staff are working from home. We improved our information technology to ensure that we can access Shelter Afrique from anywhere. The project was called Chef Anywhere. So all meetings are virtual. All staff do their work, and actually we've seen that they become even more productive that way. And then another thing also just to note with COVID is that we've taken a strategic decision that since COVID is something which has impacted the economies of most of the African countries, we've said we as Shelter Afrique are going to use COVID as an opportunity to advocate house construction, an opportunity to advocate investing in infrastructure. Why? Because housing is the one industry whereby you can actually bolster and kickstart economies.
And that is a noble pursuit. Issue of affordable housing as the Kenyan government, you know, that is a priority as the continent of Africa. Looking at statistics across countries, Ghana 1.7 million deficit in housing, Kenya 2 million deficit in housing. And now the question arises when the government comes up with, you know, affordable housing agenda. It sounds like a very common term. Maybe help us understand, because affordable housing, you know, what goes into that? If you may just expound for us slightly.
You see, affordable housing is the most commonly used term because, for instance, if an individual can afford a house of 20 million shillings, it means that house is affordable to him. And then if, let's say, the normal Mwananchi can only afford a house of 2 million or 3 million shillings, that's affordable to him. So I think we at Shelter Afrique are going to be defining officially this year what is really affordable. Now, what I think we should be focusing on is that in Africa, the biggest problem in the housing market across, you talked about the different countries, when you look at the 56 million shortage, you start to dissect and say, how is that split in the continent? 22 million is now Nigeria. I think there's a correlation with also the population. You go down, 3 million Tanzania, 3 million also in DRC, in Congo. Then you've explained also the Kenya situation. Why is that so? It's because the single biggest challenge in Africa is affordability. So now we as Shelter Afrique, understanding that there's a problem with affordability of houses, when we look across the different countries in the continent, people are building, but without understanding what the majority of the population can afford. So where we then have a problem is now when we talk of affordability. So in short, for us, we're looking at low cost, high quality housing. And to achieve that, you have to be able to deliver it at scale. That is why we as Shelter Afrique, we sort of try to advocate for public-private partnerships, where to come up with that low-cost, high-quality house, anything between 50 to 100 square meters or so, that requires government to come in and say, look, I will put in land, or I will subsidize infrastructure, or I will even pay for infrastructure. And then you then have the private developers and the banking system now taking up now the top structure.
And that is clear. 3 million and below, that is relatively affordable in our economy right now.
Sure.
You've touched on public-private partnerships.
Yes.
Very important. And you as a company also, you are in a position to finance.
Yes.
Means if you're empowered more, then you will finance more.
Yes.
There's been talks of increasing your capital base as a company.
Yes, no.
Tell us about that.
Okay, well, 56 million housing units, you need at an average of, let's say, $2,000 or let's say $25,000. You need at least $3 trillion worth of funding. Our balance sheet, cannot take that. Now, we have an authorized share capital of $1 billion, which I would say 108 billion Kenyan shillings. Now, in that, we have issued share capital of 300 million okay, which would, of course, in Kenya shillings would be about 30 billion. So 30 billion Kenyan shillings. But what we are saying is that for us to be able to support the public-private partnerships with funding, we need to be capitalized. So the way it works is that if you look at our capital structure, we are owned by 44 member states. Those member states, we've issued 300 million, let's say, US dollars in terms of share capital. What we have collected is less than half of that. So we are on a capital drive to say to our member states, please can you come in and pay in your capital? Why? Because we then use that capital to be able to now, borrow by leveraging on that capital base to borrow long-term debt, so that we come up with a competitive financing package for developers and tier 1, tier 2 banks in Africa. And that's essentially how it works. So if we come right down to Kenya, for instance, we are expecting to collect 26 million US dollars from Kenya. The CS for transport, infrastructure and housing and urban development, CS Macharia, has already committed that the 26 million will be paid. We're fortunate to have the CS for National Treasury, Honorable Yatani, who actually committed to say, as Kenya, Kenya will pay the 26 million, US dollars. And what does that mean? It means then that that same money will go towards supporting the Big Four agenda. But we've also introduced another class of shares, which is Class C, yes, where we are approaching multilaterals internationally to come in and say, at a ticket size of $50 million, come in and invest in Shelter Afrique, and you can have a window to 44 countries in Africa, if you are interested in housing, if you are interested in developing, in achieving development impact. Once we get Class C, of course, that will lead to a dilution where you may end up with maybe 60, 2020, yes, etc. But that is basically what we are looking at in terms of trying to change our structure. So yes, I think the ideal capital structure will probably end up being maybe 40% Class A, 30% Class B, and 30% Class C.
Definitely. And you're saying you are en route towards the capital markets.
Yes.
That journey, what does it take to get there? Okay,
so what it takes to get there, is firstly, you have to show that, one, you're a well-governed company. And you'll find that with Shelter Afrique, we also received the ISO 9000 2015 Quality Management System Award to confirm independently that we are well-governed. We have a competent board. We also have a competent management team, and we've got strong, stringent internal control processes, etc., and what have you. The second thing you need is you also need to be a financially sustainable company. And part of the journey of us reducing the losses over the years is to ensure that 2020 we at least try to make a profit, and then 2021 we make another profit, which means that realistically we can enter the capital markets by 2022. But the process itself requires a lot of planning. Yes. And then, of course, lastly, you need to have a pipeline of very good projects. Our pipeline is almost $1 billion, US dollars as we speak now, which you're looking at about 108 billion Kenyan shillings pipeline. But that pipeline then needs to be funded. Yes. And then in many cases, you'll find that with strategic partners, again, like the African Development Bank, yes, they can come behind us because they are a AAA rated institution and provide credit enhancement so that when we go to the capital markets with their support, the actual money that we raise it at an affordable rate. For them to have a house which is affordable, the financing to assist them to buy the house must be affordable, yes, which is where we play. We provide lines of credit to those banks. The second thing is the construction of that. When we provide financing to developers, that cost of that funding must also be at an affordable rate as well.
Definitely. And we wish you all the best. Sure. Those critical steps towards the capital market. Yes. You guys are taking care of them. Yes. But most importantly, you are working to make sure that Africa is built. Yes. Right now we stand at 1.3 billion people. In the next 5-10 years, we'll be at 2.5 more people. Urbanization. Correct. And now there is an opportunity where Shelter Afrique comes in. Thank you very much for speaking to the Trading Bell.
Sure.
Many thanks for staying with the Trading Bell. I hope you got a thing or two from that particular interview we had about the real estate. Time now for the markets analysis, and I'm joined by the Head of Business Development, NCBA Bank, Samuel Gijohi. Many thanks for coming, Bwana Samuel.
You're welcome. Thanks for having me.
Now let's go straight into the look of the day. Quite some activity that we're seeing now that the president has almost announced that the economy is open. I think there's a window there between 11 to about 4. But what does this mean for the markets?
Well, I think it gives us, yes, of course, more time for businesses to run. It does also signal the markets that we are now opening up, and so business will start coming back to the normal sort of time cycles. What I also think is that it will also, more business hours means people have more time to visit whatever or do whatever they need before they have to be indoors. So that is generally a very good signal to markets, because then it also means that there'll be more revenues, more circulation of liquidity, which is good for the economy.
Well, after the announcement of the president's opening of the economy, one of the trending topics was booze is back. What does this mean for the manufacturing sector, especially for shareholders at EABL?
Well, I think, yes, there's expectation that EABL may have suffered quite a bit in terms of the volumes they would be selling under normal circumstances. Of course, notwithstanding the fact that a lot of people just moved their drinking habit home. But that said, I think that is good for the EABL stock, which we saw go down to levels of below 160, at some point about 158.
Wow.
But now we've seen in the last 1 week, we saw a rally. It's now trading at around 168. Actually, it touched 170 today, which clearly indicates that there was the expectation that this particular issue of pubs would be opened up. Markets will usually reward the expectation of a recovery, and I think that is why the rally happened.
Okay, that's a good one. And now that you've touched all the markets, looking at all the uncertainties that we have had, what does this mean? Because relatively we have been doing okay. What does this indicate in terms of just the markets in general?
Well, the market bottomed out around late March. Since then, we've seen about 12% gain across. This is on the indices. And if you look at that, in as much as we have had a bit of volatility, which is actually very good for the market, for the between March and early August, most of the activity was local investors buying, and the foreign investors on the selling side, which means that pushes the market down, because foreigners will be doing big tickets. Our local investors are not big enough to really sustain that, so it will usually push the market down. Last month, almost the whole month, we had foreign investors as net sellers for the first time since March. And you can see that in share prices of, say, Safaricom, which is 30 shillings and thereabouts. It's been sitting around 30 shillings. We've seen KCB going to 28, 29, and 38, 39, which was sitting at around 34, 35 for the longest time. So that is an indication that foreign buying will usually push the markets up. And so as we open the market, as we open our economy up, then it means, because it means that we are doing okay. If you look at the statistics on the COVID end, we are doing much better than other countries, not just in Africa, but globally. It means that they're getting attracted to that, because in their countries they're still suffering quite a bit, and their markets are still subdued because of the whole coronavirus issue. So that is actually a good thing, and it's been pushing the market up. So we've seen the rally.
So a quick answer here. So where are we? Are we on a dip? Are we on a stagnation? Are we on a rise?
It's a tough call at the moment to make, because then there is the uncertainties that are related to COVID-19. If a resurge happened, what will happen? So it's always, in finance we say all else equal. If things stay the way they are, then we would expect more foreigners to start warming up to our market. We are going into announcement periods, which we expect Safaricom to announce next month. I think it's their half year, and that usually excites the market. The foreign investor loves Safaricom. So that said, we expect that as foreigners come in, it will continue to push the market up. But most of the blue chips, particularly say the likes of Safaricom, KCB, Equity, EABL, are still trading at discounted prices,
Okay.
which means it's still time to buy because the market is more likely to go. We have more upside on this than downside.
That's good news for shareholders. In fact, now talking about the top gainers, the only blue chip company I see is EABL. I don't know whether this is because of the announcement.
Absolutely, absolutely, yes. It's happened for the last few days.
Okay.
Almost a week or so. That's when we've seen that.
There's been a prediction that
yes,
this is going to
that
happen.
means the market was anticipating the announcement yesterday.
All right.
Yes.
Let me get your quote. When others are afraid, be brave. That's you who talks a lot about it. Is it the best time right now to think about buying because of how the market has been, in your opinion?
It has been since March.
Okay.
You know, when markets are down, and it's not a fundamental issue, it is an external factor that has caused it, and the external factor is not going to stay forever. It means that as we go back to normal, then the stocks should go back where they were before the whole problem started. So it means as COVID-19 begins to be in control, it means that there's markets and the economy will start to pick up. Okay. And so it's been a good time to buy since March. We've had our turbulence, our volatility, but generally it's been a time to buy.
Wow, many thanks, Kishori. But before you leave, let's talk about the shilling and its effect on especially importers. What's your comment on that?
Yes, the shilling has lost quite a bit of value to the dollar. Of course, then it means we're getting less dollars for every shilling. Yeah. So yes, the importers will probably have to fork out. But I also think it's always good for the shilling to be allowed to not be too protective of the shilling, so that we have a real picture of the valuation of the shilling, which for the longest time we felt it was overvalued. Okay. But so I think it was going to happen, but hopefully as our economy recovers and as our economy strengthens, then the shilling will also at least stabilize.
Many thanks for those insights, Gishoy.
You're welcome.
Now, I want us to just cross differently in a different way to Markets 101, because I would like you, now that you're talking about a situation where we need to be thinking about investing and the likes, and the question is this: what is this mindset the viewers today should have, especially when thinking about the money markets funds and investment? I just want to put you on the spot as a man who is big in these issues of money market funds. What would be your quick advice to them?
Well, my thinking right now is focus on what can beat inflation. Okay. I think inflation is about 4.5%. Yeah. Most money market funds, especially those dealing with fixed income, money markets usually means they're dealing with a lot of fixed income assets. They will give you a sort of return, even if it is 7-8%. That beats inflation and protects your principal. So if you're not feeling like taking much risk and you have money that you want to protect, that would be a very good way to go. But you also need to look at some risk, and that is why now stock markets and equities come in, because then you want to have something that, you can say, I'll take some risk here, but when the upside comes, it's going to beat inflation. But that also means you're trying to avoid stocks that will be hard hit if something goes wrong. So you need to stick with the blue chips. And that's why you've seen a lot of investors just sticking with Safaricom, KCB, Equity, those big ones, Standard Chartered. So those ones tend to be more stable. And also on the upside, right now, because they're discounted, they're good stocks to buy. All right, thanks a lot, Gishohi. You're not yet done with us, because we have a question that has been asked. And this question is coming from Twitter. Kaylee is asking, what's a dividend drought? What's a dividend drought? Yes, we've just been talking about the effects of COVID. Yeah. Now, a lot of companies, because of the whatever measures they had to take during the COVID-19 time, and probably because of the effect of this period on revenues and income, etc., means that they're not going to be making as much, but they also want to protect their reserves. So you'll find that companies will either cancel dividends because they feel they need to hold on to the money, since there might be a period of no profit or a period where they need more resources, or maybe a company is expanding and they feel they don't want to be paying out in cash. So what happens is they cancel or they don't pay dividends. And so sometimes in an economy, especially in this period. We are expecting, for example, in the next announcement period, to see most of the companies that are very good dividend payers, like Absa, Barclay, Absa, Centum, Equity, holding back or cutting their dividends by, say, 50% or so. Some of them, I think Absa had announced that they will not be doing it. So that in itself is a dividend drought, because then there are no dividends coming to shareholders. And we have those dividend-seeking shareholders who will usually be affected the most by this.
All right, many thanks, Gishohi, and I hope, Kaylee, you've been rightfully answered. Time now for the historical fact for this week. So that's it from us right here on the Trading Bell Show. I hope you got your nuggets about the real estate and how it's doing from the CEO interview with Shelter Afrique. And many thanks, Samuel Gishohi, for coming through and telling us about how the markets are doing.
Thank you. It's always a pleasure.
All right. That's it from us right here. Of course, remember you can give us your feedback on our social media handles appearing at the bottom end of your screen. My name is MC. See you next time, same place on the Trading Bell.